The Dictionary of Real Estate Appraisal, page 150, chapter M, continued. The annual debt service to the principal amount of the mortgage loan. The mortgage capitalization rate, the acronym is capital R over M, is equivalent to the periodic, monthly, quarterly, annual, mortgage constant times the number of payments per year on a given loan on the day the loan is initiated. The formula is here. Mortgage capitalization rate, the acronym is capital R over M, equals annual debt service divided by the mortgage principal. Mortgage coefficient, the acronym is just capital C. A multiplier used in the Elwood formula to compute a capitalization rate. The mortgage coefficient is a function of the terms of the mortgage loan, the projected ownership period, and the equity yield rate. Mortgage company, a firm that brings mortgagors and mortgagees together for a fee, or one that acquires mortgages for resale. Mortgage constant, the periodic mortgage payment expressed as a proportion of the original loan amount, also called the loan constant. The formula is here. Mortgage constant equals I divided by M divided by whatever 1 minus this comes up with. 1 divided by 1 plus I divided by M, little mn, I don't know. But that's how you get your mortgage constant. Here it says where the low cap I equals annual mortgage interest rate. So annual mortgage interest rate is right here and right here. Low cap N equals loan term in years. So you have the low cap N right there. And the low cap M equals number of payments per year. That's right there and right there. Anyhow, that's how you get your mortgage constant. Mortgage correspondent, one who acts as an agent for national lenders, making loan commitments for them using the standards of acceptability of those lenders. May also service loans for the lender for an additional fee. Mortgage debt service, the acronym is capital I over M. The periodic payment for interest on and retirement of the principal of a mortgage loan, also called total mortgage debt service. Generally, the abbreviation capital I over M refers to the total debt service, whereas mortgage debt service can be used to refer to either the periodic payment or the total of the payments made in a year. Mortgage deed, a deed that has the effect of a mortgage on the property conveyed and imposes a lien on the granted estate. Mortgagee, a party who advances funds for a mortgage loan and in whose favor the property is mortgaged, the lender. Mortgage equity analysis, capitalization and investment analysis procedures that recognize how mortgage terms and equity requirements affect the value of income-producing property. See also Elwood formula. Mortgage equity formula. See Elwood formula. Mortgage fraud, a material misstatement, misrepresentation, or omission relied upon by an underwriter or lender to fund, purchase, or insure a loan. FBI. Mortgage insurance. A contract that insures the lender against loss caused by a mortgagor's default on a government mortgage or conventional mortgage. Mortgage insurance can be issued by a private company or by a government agency, such as the Federal Housing Administration, FHA. Depending on the type of mortgage insurance, the insurance may cover a percentage of or virtually all of the mortgage loan. See also private mortgage insurance, PMI. Mortgage insurance premium. A percentage charged each year on the declining balance of the principal of a mortgage to insure the mortgagee against loss. Mortgage insurance is available on a private basis and is referred to as private mortgage insurance. The acronym is PMI. See also private mortgage insurance, PMI. Mortgage lending value. The acronym is MLV. Number 1, the value of a property that, based on experience, may throughout the life of the loan be generated in the event of sale, notwithstanding temporary fluctuations in value in the relevant, page 151, property market, which could be due to cyclical movements and excluding speculative elements. German Mortgage Lending Value Regulation. Mortgage lending value number 2. The value of immovable property as determined by a prudent assessment of the future marketability of the property, taking into account long-term sustainable aspects of the property, the normal and local market conditions, the current use, and alternative appropriate uses of the property. European Union Regulation number 575/2013. Mortgage life insurance. A type of term life insurance often bought by mortgagors. The amount of coverage decreases as the principal balance declines. In the event that the borrower dies while the policy is in force, the debt is automatically satisfied by insurance proceeds. Mortgage modification. The act of changing any of the terms of the mortgage. Mortgage note. A document or a clause in a document in which the borrower accepts responsibility for the repayment of a debt. Mortgage out. To finance a project without making a cash investment in it. Mortgage ratio. The acronym is just M. See also loan to value ratio. The acronym is just capital M. A mortgage rate. REIT. A real estate investment trust. The acronym is REIT. That makes or owns loans and other obligations that are secured by real estate collateral. Mortgage release price. A specified amount to be repaid to a lender to relinquish the lien on an individual parcel that collateralizes a portion of a mortgage loan secured by multiple parcels. Mortgage requirement. The periodic level payment or installment required for debt service. For instance, interest plus principal on a direct reduction loan. See also mortgage constant. Mortgage residual technique. See residual techniques. Mortgage revenue bonds. Tax-exempt bonds sold by state and local governments or state housing finance agencies to pay for the acquisition, repair, or construction of real estate. Because the interest earned by bondholders is exempt from federal and possibly state and local taxation, the bonds are sold at a lower interest rate than taxable bonds. Tax-exempt, lower than market interest rates are charged to borrowers because the interest savings on the bonds are passed on to the borrowers, also called mortgage subsidy bonds. Mortgage risk rating. A process in which the major risks undertaken in the making of a mortgage are thoroughly analyzed in accordance with the risk involved in the loan transaction or in connection with insurance of the mortgage, a basis for classifying mortgages as to their quality as investments. Mortgage servicer. An organization that collects principal and interest payments from borrowers and manages borrowers' escrow accounts for a fee. The servicer often services mortgages that have been purchased by an investor in the secondary mortgage market. Functions include reporting to the trustee, collecting payments from borrowers, advancing funds for delinquent loans, negotiating workouts or restructures as permitted by the pooling and servicing agreement, taking defaulted loans through the foreclosure process, and liquidating defaulted loans and real estate owned REO. Mortgage servicing. The collection of mortgage payments from borrowers and related responsibilities of a mortgage servicer. Mortgage term. The amount of time specified in the loan documents between the loan closing and the date the loan is to be paid off. The mortgage term or loan term may differ from the amortization period. For example, a loan may be amortized over 25 years, but be due in 5 years. See also amortization and loan term. End of page.